I just want to announce it. Thank you very much.
Okay. Okay, Menekşe Hanım, thank you very much. So I can start again, indeed. Dear colleagues, good afternoon. You are all welcome. As the Insurance Practitioners Association, we are very pleased to be with you at the 12th International Istanbul Insurance Symposium this year. First of all, thank you for your participation. This year, the theme of the symposium is growth opportunities in the insurance sector, digitalization, and future of work. In the morning session, which was in Turkish, Chairman of the Insurance and Private Pension Regulation and Supervision Agency of Turkey, Mr. Türker Gürsoy, Chairman of the Association of the Insurance, Reinsurance and Pension Companies of Turkey, Mr. Atilla Benli, Secretary General of the Association, Mr. Özgür Obalı, informed us regarding the vision and mission of the new organization and recent progress of regulatory agenda. And with esteemed speakers, we discussed growth opportunities of Turkish insurance and pension sector. I thank all of them very much once again for their participation and contribution today. Now the theme of this session is digitalization and future of work. As we all know, the pandemic process has had many economic and social effects on individuals and organizations. Our working environment, business processes, as well as the needs and expectations of our customers and business partners have changed significantly. Technology, human resources, physical and cyber security issues, and supply management became critical in terms of sustainable business and income model. Therefore, the companies making digitalization investments and plans in advance, who knows the risks, monitors and manages them successfully, having agile way of work and invest in human resources will have a competitive advantage in this process. In this session, distinguished speakers from Turkey and abroad will discuss digitalization and future of work issues in detail. I would like to thank all of the speakers who contribute to this session. I hope this session will be technically perfect and will be completed in an enjoyable and efficient manner as the morning session. I wish you all healthy days with your families and colleagues. I hope that next year we can hold our symposium face-to-face in Istanbul, as in previous years. Finally, I would like to thank the board members of Insurance Practitioners Association, organization sponsor Istanbul Underwriting Center, and media sponsor Sigortacı magazine, and leave the speech to Mrs. Menekşe Uçaroğlu again.
Hello, this is a surprise for me. I didn't expect to have the microphone. Thank you very much once again. Maurice, by this, I would like to tell you that the question and answers management is at your hand. So from the questions module, please, you run it. And welcome to all the speakers once again, and go. It's your turn. Thank you very much.
Thank you, Menekşe. Okay, welcome everybody, and thank you so much to the organizers, Menekşe and Fahri Bey, of this event, which is quite challenging, I think, in the context of current remote working, which continues for most of us in most countries. It's very important that as many of these really valuable networking and learning and sharing events continue to happen. So I take my hat off. I respect greatly the efforts of Menekşe, Fahri Bey and all their colleagues to make this happen. We have a very interesting but very potentially broad subject, and when we talk about digitalization and automation in the insurance reinsurance industry and the future of work, we really do need to tap into the knowledge and the experience of some of the best practitioners and the most professional practitioners in our business. So we're very fortunate that we have 5 of the very best informed people in our business with insights and understanding which they want to share with you. Because the main point of today is for everybody who's giving the time to join us today and listen, that you get answers to some of the questions in your head, i.e. what should I be thinking of in my role for my company when it comes to digitalization and automation? What should I be considering I need to invest in? What skill sets do I need to develop in order for my organization or my team or my function to perform to its utmost and take advantage of the changes which are happening? And also, of course, how should we deal with the consequences of the change in working culture, which will probably outlast the immediate shutdown or restrictive working conditions of COVID-19. So even when this pandemic has passed, it's very likely that we won't necessarily go back to the old ways of working. And what does that mean in terms of how we nurture our joiners, our starters, or how do we keep the cultures intact that we value so much in all of our organizations? So the speakers we have today, as I say, really wonderful selection, and many of them will be known to you. Certainly, Selva will be known to you, who is the GM of Türk Re. We also have Munich Re represented with Tobias, and Tobias may be joining us a little later, so he will be speaking at the end. We have Nikhil from Swiss Re, who will be speaking first. And the logistics of the session will be that after Nikhil presents, I will ask him to give me, I will ask all of you to give me any questions that you wish to ask him. And if you could do that by typing those into the messaging bar, and we will pick out as many of those as we can, and Nikhil will deal with those immediately after he has spoken, because he, unfortunately, but very understandably, has to rush off to another important function. Thereafter, I will introduce the four speakers who will be following Nikhil, and I will give each of those. We will have a Q&A session at the end of all four have contributed their sections. So if that all makes perfect sense, I'll just give a very, very high level, because I don't want to preempt the wisdom that we're about to hear from our speakers. But when we think about digitalization automation in our industry, we tend to think of the power of capturing big data and enabling predictive pricing and the tech platforms that are used for product distribution, risk origination, and the claims handling techniques which can minimize human involvement and cost. And we also think of the disruption that comes from the insurtech startups. So all of those elements are addressed in one shape or another by each of our speakers today. So I'm not going to preempt by trying to describe in detail my views on any of them. We'll all have the opportunity to question the speakers as they contribute, or as after Nikhil contributes, and then after the other four have contributed. But I think there is something peculiar about our industry, insurance and reinsurance. I think in the traditional model of our industry, there are three key areas of skill or knowledge or value. One is the risk origination and pricing. Secondly, you have, and that typically lies with the original clients, policyholders, and/or the agents or wholesalers or brokers. Then you have the packaging of portfolios of risk, which traditionally is carried out by the insurer. And then you have the capital providers. The capital providers to some extent sit within the insurers, but from a reinsurance perspective, the connecting of new portfolios of risk with all forms of capital remains at the center of our value contribution to the financial sector. And the other peculiar element of insurance, more so insurance probably than reinsurance, but both, is that individual buyers of insurance or reinsurance really want to be confident that this product they are buying, which is just a piece of paper, it may be a piece of regulated paper, is going to deliver the end benefit which it's it's designed to do. And there will be questions in the minds of policyholders, perhaps after COVID-19 business interruption claims were subjected to court deliberations, both, as many of you may have heard, certainly in the UK, in the US, and elsewhere. Regulators have been challenging the industry to be more responsive to claims. So this just highlights the importance of confidence that policyholders have in our ability to respond as they would anticipate, whether you're an insurance policyholder or a reinsurance policyholder. So there's a great need for human confidence here. And it's possibly going to inhibit, to some extent, the automation of everything, the digitalization of everything, because in many, many, many countries, even where these platforms are available, the human element is still necessary. And we know that agents and brokers continue to be very important because they're known to, or they're trusted by, the policyholder. But ultimately, it's the entity closest to the customer, which is optimizing the use of data and with access to the lowest cost of capital across the cycle, that is likely to emerge as a winner. So I'm not going to say any more. I've probably spoken longer than I should. So I would like now, if I may, I'm going to check, Nikhil, that you are online and you can hear me. Excellent.
Yes, Maurice, I can hear you. Can you hear me okay?
I can hear you, see you perfectly. Thank you, Nikhil. I'll just give a brief introduction to Nikhil, if I may. Nikhil is the head of Western and Southern Europe in Swiss Re. He started out in Securitas Capital before joining Swiss Re in New York in 2003, where he was underwriting predominantly Latin American property business. In 2008, within Swiss Re, he switched to the public sector solutions business as a client manager and really built that from its very beginnings, and had to establish connections with senior government and business leaders in the US, in Canada, in Latin America. And that role ultimately led to some remarkable achievements. He was working very closely on the World Bank's pandemic emergency facility, the Caribbean cat risk insurance facility, the Uruguayan drought hedge, and certainly the latter two were very innovative climate risk solutions for sovereign states. He's an economics grad. All the best people are economics grads from Wharton School of Business in Pennsylvania. And with that, I'll hand over to you, Nikhil. I know you have some slides you wish to share.
I do. Let me put them up. And again, I will talk to them. Please let me know when they show up. Here, let's go to share screen. Application note. Just give me 1 second.
No problem.
Yes, sure.
Is this,
There we go.
perfect. Great. Do you see it on the screen?
Yes.
Perfect. Perfect, Nikhil. Thank you.
Wonderful. Well, thank you very much. And Maurice, thank you for a wonderful intro. I've never heard my bio describe that eloquently, so I will need to take a lesson there. But more material, I thought your comments actually were very thoughtful and lay a very good and insightful framework for the discussion we have ahead, because I think what you alluded to is that prior to COVID, there were many, I think, events in the industry which touched on digitalization, touched on automation. Future of work was less prevalent, but certainly the first two, in somewhat of, I'd say, a academic perspective of, a wave that was somewhere in the future that was going to eventually come. But let's get back to the day-to-day business. And I think what you rightly put as a foundation for this discussion is that that wave has now come upon us. And on some sense, while the world will be the same once we get out of this, it also will not be the same. And along these lines, what I'd like to do is actually dig a little deeper into what can we expect from the trends, and frankly, more materially for this audience here, what is our role in driving that change and being part of that transformative change, if I may use that term. And where I'd like to start is actually in reverse on the future of work topic. And again, I think we talk very broadly. People can look at the words on the slide about kind of forces at play. These could have been probably for any presentation of what the world may look like in 6, 12, 18 months from now, right? So, every company has to have a technology view, a technology interface. It's no longer good enough to be a company focused on profit, but broadly stakeholder management and stakeholder return versus shareholder return. And lastly, that we have this great exogenous shock event that has at least seemingly temporarily moved hundreds of millions of people into the remote workforce. But presumably, we're fortunate here in my office in Zurich that many people have been able to be, for the time being, back in the office, but that could change. But we hope that every country will go through this reopening, and obviously the threat of reclosing at some point in the months ahead. But eventually we'll get back to a new normal. But I think what these very simple words on the screen belie is the truly tectonic shift that's occurred. And if I may kind of dig deeply into it, of what is not here but is the undercurrent. Prior to COVID, there were obviously tremendous discussions around the gig economy. So what I think many people in emerging markets and advanced economies were already experiencing was that the traditional labor force contract of a single employer was not really the model of the future. I think what COVID has done is made, in some sense, the gig economy a job for everyone. So that includes people as fortunate as many of ourselves who have, good corporate consistent employers. When we're working from home, we're also juggling the roles of a homemaker. We're juggling the roles of being an educator. So in some sense, the gig economy, or this last point of the seismic shift in the workplace, has touched all of us. We are all now gig economy workers. Secondly, if I can talk about this element in the social enterprise and what has fundamentally shifted. A couple of years ago, Swiss Re began introducing the idea of own the way you work. This idea that what mattered was that employees deliver on the goals of the company, but really find a flexible schedule that works with their own individual considerations. And I think that while this not only provided us a great resiliency when it came to the shutdowns, more material, it also underscored that at the end of the day, this world where the office is left behind when you leave is no longer the case. When we're at home, we're equally exposed to, in my case, I know my children commenting on my work, trying to understand why do I do what I do and take the decisions I do. And being accountable to a 6 and 8-year-old is as rigorous a shareholder environment as being accountable to my own CEO. So in that sense, judgment upon us on what we do and how we do it becomes a very real enterprise. And lastly, and I'll pick up in the second, the technology piece, absolutely the case. All of us have to have a technology view, because as we see right in this example, but even on the case of how we collaborate, getting access to sharing information, picking apart information, distributing information, the 3 buckets you talked about, the origination, the packaging, the capital providers, are all now technology driven. I've already picked up on some of these elements in this topic of future of work. And let me just elaborate here on why I think this is so fundamental, because I think at the end of the day, what we're describing on the future of work topic is actually the cultural shift and the cultural challenge that will then be put before our industry. So in particular, I'd like to pick up on items 3 and 4 here. The first on the concept of the new employer contract. So the world that the insurance industry was built on the last 300 years was essentially one where we were servicing corporates, certain demographic populations, and the employees of corporations. In this new employer contract, the demands of that stakeholder universe are going to be very different, and more fundamentally, the risks that people face are going to be fundamentally different. If I can pick up one example, coming back to the permanency of the gig economy, or let's say the pervasiveness of the gig economy, the risks that people now face, where you have, let's say, working parents who are juggling work from home, distributing the workload, the exposures that they face will be fundamentally different under this new employer contract than they were when people were standalone, coming into the office every day and keeping the home separate. What exactly are those new risks? How they'll manifest themselves? I think this is going to be a challenge for our industry to pick apart. But most certainly, the products and the offerings we provide have to shift to gear to this new reality. And coming to then topic number 3 around the redefining of leadership. I think the burden it will put on us as an industry is, one, for the primary players who are the audience here, it's willing to take risks on trying to predict how that economic environment will look, and providing the transformative offerings and solutions to help us move to that new smooth and stable economy. And for reinsurers, in turn, it will be, frankly, stepping out a little bit of our comfort zone of the actuarial table, because the actuarial table designed in the past experience of the last decades, or in Swiss Re's case, 157 years, do not provide us the actual insight for what's going to come in the future. Which leads me now to the topic around the data element. So years ago in my prior job in the public sector, I was often given the challenge, public sector forums, by people saying, well, clearly the issue for the insurance industry is lack of data. And certainly from the period of 2008 to, I'll pick a rough number here, 2011 or 2012, it also seemed to me that data was a challenge. I believe, frankly, that anyone who says today that data is the challenge is not dealing with the tremendous data being generated on a daily basis, which I think is in the terabytes per day, but also on the investments that need to be made to, let's start with number 1 here, obtain that data. Secondly, analyze, or let's say homogenize that data. Thirdly, bring that data into a usable format with other data sets. And then a little bit blending 4 and 5 here, delivering of new solutions based on that data. So again, if I can pick up one topic that's very close to my heart, if we look at the topic around, for example, micromobility to e-scooters, unquestionably, there's a tremendous amount of data being gathered or created around the topic from people who use micromobility. Obtaining that data is one challenge, but do we truly as an industry have a sense on how can we use that data to fundamentally deliver new offerings that allow people to get from point A to B safely and securely, which in turn transform their ability to participate in the gig economy that we described as the new normal. So again, said another way, I don't think data is the issue. I think it's going to be the investment in how we mine, triage, and deliver that data in a usable format. And lastly, kind of bringing this all together, I think that if we talk about these data insights, we've talked about the data, we've talked about the technology investment. I think the piece, and I'll leave you with kind of a last anecdote on this. I think the piece that we need to think about is, what is the purpose of all this investment in this data gathering and mining? And this is the people piece. And maybe here I'll share kind of a view on this. I think that what we're going to struggle with in this new normal and the investments that we need to think around the digitalization is, how do we ensure that the new offerings we provide, the interfaces that people have, are really balanced with value and purpose for them. So returning to the topic on the micromobility, one vantage point to think about the micromobility topic could be from the view that by providing solutions around micromobility, we're tapping into a new regulated or unregulated insurance opportunity. I certainly venture that that's one view, but I think there's a deeper point, and I've talked about this with our clients and our team. At the end of the day, providing safe and secure transportation is not an insurance topic. It's a topic for economic transformation, because if we can do that, we actually open up the workforce and the workforce opportunity to a whole range of people who don't currently have it. And that people piece, that element of thinking about what we're doing and the purpose it delivers, allows us to provide products that are not only meaningful, but frankly, where people are willing to pay for the value they bring. So in summary, look, I don't think we have, as it's easy to say, a crystal ball, what certainly the immediate future, but even the long-term future will hold. And I think post-COVID, it's going to feel immediately like we're returning to an old normal, but I assure everyone it will not be the normal we had before. But what we're fundamentally going to have to rely on is the new data, the mining of that data, the partnerships that come with these new challenges, and lastly, and most critically, trying to ensure that what we deliver truly brings value and purpose to the people in our economies, because not only will people then stick with the insurance industry, not only will it be relevant to people, but most commercially minded, they will be willing to pay for it. And Maurice, with that, I will turn back over to you.
Hello. It was me on
Hi.
Maurice. Sorry, Maurice, to keep you busy. Sorry.
Okay, Menekşe, sorry. Okay. So, can you see me?
Maurice açık.
Can you see me?
Normally, yes, because your screen is open, but we cannot see you.
Yeah. Should be okay. I mean, you can?
Yes, you're back.
Okay, sorry. Sorry, you were trying to say that we should ask, Selva should be speaking next?
If possible, yes.
Yeah, absolutely. Well, look, I'm going to just ask Nikhil a few questions. I hope we haven't lost you, Nikhil, if that's okay.
No,
you're still there? Oh, good. Okay, sorry. Basically, the concept of the social enterprise, which was mentioned, I think, as one of the three forces at play in relation to the future of work, with a responsibility not just to make profits, but also to respect its environment and its stakeholder network. So we all know there will be those who argue the two are not compatible, that a company cannot have a conscience, that it should focus only on profit because damaging the environment would damage its reputation and its profits, and that's how it should be guided to behave in a responsible way. How do you feel that companies like Swiss Re can explicitly factor this in, and how do you reassure shareholders that their primary objectives, which may be purely profit, are not being compromised too much?
Great question. And look, maybe first at a purely, if I may say, capital management perspective, if you look at the pressures shareholders face, because remember, for most institutions like Swiss Re, we're talking about institutional investors, the pressures from their own pensioners, auditors, regulators around ESG, in turn puts the pressure on companies like ourselves to really execute to this further standard. But I think you ask a deeper question, which is that a good enough reason to be socially focused? and I have a very distinct and different view on it, which comes back to the people piece, which is that, and it's not unique to insurance, but I think it's particularly prevalent in insurance. I think the reason we need to be so driven by having purpose to what we do is because I believe that if we have purpose to our offerings, people will pay more for it. So if people understand that the contract they're signing with us is because we want to be part of transforming their life and their livelihood and their economies to being more vibrant, to being more inclusive, to being structured better, people will stick with those enterprises, and we won't enter into the what I describe as the death spiral of the insurance industry about price competition. So price matters, but value matters more.
Cool. No, excellent. Okay, no, that's very, very, very interesting. I fully agree with you. In terms of the other point you made, which was interesting about culture erosion in a more virtual world. And again, I mean, from Swiss Re's experience, how are you addressing that, particularly with new joiners since March this year, who may not have? I gather you're back in Zurich now to some extent, but how did you deal with that in the interim?
No, it's a look. I think there are, if I may say, three dimensions to it. One is purely from an administrative logistical basis. I think what you're going to see. So Swiss Re, we were very fortunate, rolled out kind of new interface platforms that allowed us to do things like the video correspondence. I think we're building out even more infrastructure in that regard. So that's kind of the logistical piece. I think the second piece is, if you will, I'll say maybe the empathy piece, right? So I think at this point, I can tell you as a leader in the company, it becomes even more critical for people like myself, but all the way through the organization, to ask new joiners not about what they're doing, but how they're doing. And to be honest, I think that brings a wonderful bind to all of us and allows an opening of vulnerability that is really fundamental to humanity. But I think the third piece that you're pointing to is where I think we do need to invest is that both A and B that I've mentioned are holding things together well, but where we will need to invest is now in this future state. How do we not only help new joiners catch up, but how do we use what they've learned over the last 6, 12, 18 months to really deliver on the future promise to our customers?
Indeed, indeed. Are there any other questions for Nikhil? Because it's a fascinating presentation. I think there's a lot of sort of stimulation of different thoughts in different directions. But I can't, unless I'm using the chat box incorrectly, people should feel free to send any questions they wish. And as I say in my note, you can be anonymous. You don't have to say who you are if you prefer. But if there are no more questions, I'll just ask one final question then. Sorry, forgive me. But
no more.
When you talk about, thank you. You talk about mining and triaging and deploying data, particularly the micromobility data, as critical. How do you think the data privacy regulations, which GDPR in the EU is probably the most elaborate example of how governments and institutions are trying to protect personal data privacy. Do you think that will compromise what would be achievable in an ideal world for the insurance industry? And I'm thinking quite broadly in terms of health as well as P&C business, where privacy is even more important.
So look, I think first, and I don't say this as a Swiss Re employee, but truly as an individual or as an industry stakeholder, truly as an individual. I think data privacy and the security of data is an element that cannot be compromised on. I would not want my data and the data of my children to be, up for grabs. And that I think is something, we absolutely have to protect. I think the challenge you rightly put is, how do we maintain that line of absolute integrity and yet find ways to create offerings that transcend this barrier and drive change. And probably the best way I can frame it is coming back to the challenges that our industry will face, both at the operational level, the primary level, but also as the reinsurer. I think there is still room to maneuver with the aggregation of data. I think with that, there will come risks around uncertainty, around the most technical issues around pricing, but also around issues of distribution. I can't exactly say how that will play out for the industry. There will be definitely failures. There will also be successes we didn't expect. But, working with regulators, being very open that this is a fundamental principle that we must maintain, but yet pushing ourselves to deliver that new offering. I think these are not mutually exclusive, though they are challenges amongst themselves. But we have to give it a try. We have to give it a try because it's a must-win battle.
Absolutely. And sorry, one final question, which has come in from Zafar Senler. Which professions will disappear or decrease with digitalization, especially remote apps, in the insurance sector? Agencies, loss adjusters?
Fascinating. Look, I would start by saying I do not believe, firstly, in the near term, any particular focus of our industry will disappear. And part of it is because there is still so much intermediation for good reason. I mean, in our industry, there's so much value bought by personal touch. I mean, again, I often speak in personal terms. I have an insurance agent, and I work with that insurance agent for a whole range of reasons. That person is not going anywhere regardless of delivery. I think the more appropriate question to ask is, what are the skill sets that we need to start building and training in our industry to prepare us for this digital future? And I would highlight one in particular. And Maurice, I applaud you for talking about the data privacy, not as a P&C issue, but also bringing life and health. And I think I still find our industry very much thinks around line of business focus. And if I can come back to something you mentioned in my bio on the pandemic emergency facility, one of my proudest projects and achievements. On a purely analytical basis, that could have been thought of as a life and health project. But when you actually look through the mechanics, you could equally position that as a P&C project. So I think where I would advocate for people in our industry to invest their time is really to step beyond a line of business, regardless of where they sit in the value chain, and really think on a holistic basis of what is the risk that my client will face in this new world, and what is the offering that addresses that risk, regardless of how it sits within the insurance framework or the regulatory scheme.
Excellent. Well, thank you so much, Nikhil. Very, very helpful and clear explanations and answers. With that, I think you're a free man. Thank you so much for joining us.
I will try and stay and listen as much as I can. I may just be juggling things. The digital environment means you get full of meetings, right? That's the downside. So.
Absolutely. No, absolutely. I think we're all familiar with that. Okay. Thank you very much, Nikhil. So with that, Selva, are you on a video, on audio? Selva, are you there?
I am. Can you hear me?
Wonderful. I can hear you perfectly.
Yes.
Hi, Selva. Yeah, very good to see you. Thank you so much. Now, look, I will give the other guys some warning in advance of who's going to follow you. So, Andrew, I will be asking you next, and then Tom, and then Tobias. But Selva, if I can just give a little introduction. I think you're known to the vast majority of people on this call. But for those who don't, and there may be one or two, you certainly have a very diverse set of experience compared to many of us in the industry. So having taken an economics degree, another great marker of quality, if I may say so. at Istanbul University and a master's degree in San Diego in the States. You began your career in 2003 as an export promotion and distribution official agent for Turkish products in the US, supporting the Turkish Trade Ministry initiatives. And in 2009, you came into the industry with Renaissance Reinsurance and Insurance Brokers, particularly focusing on large construction projects in Turkey, large energy facility risks, and supporting those. So in 2017, I found it fascinating that you co-founded the Clean Energy Agency. I'm sure that might well be one of the topics that might come up in your discussion. And in 2019, of course, you were appointed by Treasury and Finance Ministry as GM of Türk Re. And Türk Re enters the market at a very interesting time. It could be a wonderful time because, you know, there are those who believe that things are firming in such a way that risk carriers are looking at the prospect of 2, 3, possibly longer years of margin enhancement. So it could be a very good time, but of course it's coinciding with COVID-19, which may not particularly be a huge loss issue in Turkey, although not negligible, but it's nevertheless transformative or impacting the global industry. So with that, Selva, I will hand over to you to give us your thoughts on digitalization, automation, and the future of work.
Thank you, Maurice. Thanks for the great introduction, actually. Dear Maurice and guests, I would like to thank, first of all, the Insurance Practitioners Association to have me as a speaker is this esteemed gathering. In addition, also, I would like to thank Nikhil, actually in person, who gave me the motivation to be in reinsurance business. In this session, actually, I would like to talk a little bit about Türk restaurants and give some information what we have done in the past 1 year. And then the digitalization and automation, I would like to share my thoughts as well, if we could go on. As a newly established, as you know, the reinsurance company, and our main challenge was to be able to put a great and experienced and a technical team together. Every team member in our company has been selected to be very careful evaluation. After putting the team together, we have focused on our technology side. It was very crucial for us. Instead of buying global solutions, we have managed to develop our core reinsurance application platform in-house, which was extremely important. And we went live in a short period of time. Now it's a complete solution. As today, we're participating 17 insurance companies in their treaties on proportional and non-proportional. And since January 2020, we're also supporting the market in facultative basis. And this helps us to get a hold of the market's dynamics. We're also co-leading a reinsurer in Tarsim, the agricultural pool, and have supported the program with a substantial share, as most of the people they know. We also managed to do the credit insurance product with global reinsurers and local reinsurers, designing a reinsurance panel behind the product. As you all know, recently we have assumed the technical operator of TCIP. We're looking for some very important projects, which we believe will be adding a great value on TCIP. Our first aim was to basically evaluate the insurance protection amount that we are providing from the market. Our modeling team and 2 separate teams actually has been working on the numbers, and then we conclude that the reinsurance product protection amount should be raised. Another step that we took is that we kicked off a project to develop a modeling platform for our country's earthquake risk. And it was very important as well. And again, we approached this project from a product point of view. And for this, we built a development team within our company, and the solution will be designed and developed by this team. Currently, we're also cooperating with the expert senior academicians for our country in this field for our project. We're looking forward to utilize our platform for upcoming renewals, hopefully next year. As a company, as most of the people they know, we've been established with a capital of 600 million. And we are getting an extra 250 million extra capital, where we can say we're the only governmental company at the moment that gets extra capital from the government for 2020. And by the end of this September, hopefully our premium will be generation is 725K, and at the end of the year it would be over 1 billion. Ministry of Treasury and Finance has a great interest on focus on insurance business, actually on the industry, and they're willing to invest in the market, and they're willing to get more investments. And now, actually, when we come to the main subject of our session, which is digitalization and automation, I would like to say a couple of things as well. The rate of change in technology is growing higher every day. The technological gap between 10th century to 14th century is nothing when you compare it to between 80s and today. And change is affecting all industries at the moment, like shopping, transformation, communication, especially in education. And even in Turkey, in some of the public services, especially in health digitalized, which is, I think it's great. As insurers and reinsurers, we can say like we have a rather traditional industry, and most of the insurance business in Turkey and many other places is brick and mortar business. And I believe it will be for a long time, it will be like this, but still digital insurance companies, digital insurance products are merging totally worldwide. In our country, many insurance companies already serve through internet branches, mobile applications, and some years. And some of our companies are utilizing robotic process automation. And there are pioneer implementations actually of machine learning and claims processing, especially in Turkey. And also in our country, insurance companies, they've been adapted themselves very quickly for the speed of change. As Turkey Israel, actually, we're focusing on two main things, which is first, machine learning. As an example I can give is like modeling is a very essence of reinsurance business at many levels. We rigorously run simulations to get an exhaustive overall view of a risk for the right decisions, to make the right decisions. And so we can do it with bare hands and human intelligence, and it has been some time. A second one is, of course, like everyone is talking nowadays, which is blockchain technology. Most of our transactions in both treaty business and facultative business include many participants to keep their own books. And single version of truth is a matter of reconciliation. A distributed ledger participated by the reinsurers, cedants, intermediaries is in itself, which is a good idea. And if we were to include the insurers, we can add this to the list. Intelligent automatizations, process optimization tools, fraud detecting systems present many opportunities, and it's going to bring the insurers value to their businesses. And we can say technological change is inevitable. Despite the movies at the end of the day, the future of work is tied to our ability to adapt, as long as we are ready and proposition and the policy holders remain relevant. And pretty much between all these professionals about this subject, all I can say for the digitalization and automation. Thank you so much for listening to me. And I can have any questions if anyone have any questions.
So please don't be shy. Put your questions up on the chat board, sure. And I'll be happy to convey them. Sure. In the meantime, a couple of questions which have occurred to me, Selva. Sure. One, when you talk about modeling, and particularly developing an earthquake model for Turkey, with a product-based approach, which sounds very sensible. This, I guess, insofar as there are reinsurers who are participating here today with their own view of risk in relation to Turkish earthquake. We have the vendor companies like ORMS who have their view of risk, AIOR. We have the GEM Global Earthquake Model Project, which has its view. The larger brokers have developed their view. I'm just wondering what your view is on how better it might be if there was more collaboration across the various stakeholders in model building to try to develop a view which is respected and understood and acknowledged in terms of technical soundness by the parties, so that it then facilitates the risk transfer that these things are all geared to do.
Actually, Maurice, thank you so much for this great question. And everybody is asking us the same question. Why? Because the market has been using, like air, and they've been using of RMS modeling and all these things. But we don't think it's the results of, I don't want to mention especially the names and all these things, but we know that they're all black box solutions. And basically, it's not just it's also the person who's running the system or the platform. They put their own ability in that platform as well. Okay, and it's a black box solution, and you can never know what's really happening behind the scenes, to be honest with you. And most of the results that's been provided from our professors in Turkey, and they run these results. And we have a great team of people, which is the professors, and also in our board members, some of them, and from the universities. They have all these data and they have all these information. Now our aim is to be able to put this in a right platform and to run the data in a better way. It's a more sensible way and a more understandable way, because nobody can able to understand the way better than ourselves, to be honest with you. And besides, even in TCIP this year, we're planning to change the return period to a scenario basis, because we don't believe the return period it works for Turkey. That's the main thing, actually. And so because we're expecting one big earthquake actually at the moment, which is a Marmara earthquake, and our type of earthquake is going to take a place is way different than the earthquakes in San Francisco earthquake. You can consider it 250 years return period or 500 return period, but it really doesn't sound the right way how to apply it to the Turkey, which they are expecting, and we are expecting one big earthquake. We have a really substantial budget for this, and it's really going to be a product sense of it will be a product. And what we're planning is to be able to make also the insurance companies in Turkey to be able to use this product, and to be able to also cooperate with other reinsurers as a global wise as well. Hopefully by the next renewal, actually. Yeah.
Okay. No, that's very helpful. Thank you. And we have a couple of questions which have come up on the chat board. One would like to ask you about the platform that Turkey is using for your processes. Is the platform automating the business workflow?
Yes, exactly. And it's a workflow that we already, created our platform in-house, actually. And instead of buying, global solutions, of course, you all know SAP and some other companies, all these global solutions, we could able to go over and then check all these solutions as well. And then we come to a conclusion that it would be more healthier for us, because we are a brand new company, and which gives us a huge and space to be able to be doing this. So basically, we did it from the scratch, and it's live at the moment, and it's a total completed solution. And we packed it, and it become as a product at the moment.
Oh, fantastic. Okay, thank you. Yeah. And another question is, how can the insurance sector encourage insurers to use real-time data for real-time risk assessment processes? How can the insurance sector address that? What mechanisms can it develop to facilitate that? So using real-time, I think real-time data for real-time risk assessment processes. I guess it's probably alluding back to what Nikhil was talking about in relation to the micro-mobility data, having real-time tracking data.
I cannot hear it. Can you come again, once again?
Yeah, look, I'm not, perhaps the individual who's put up the question, Berkay Karadayan, feel free, Berkay, if you want to unmute yourself.
Yeah, Berkay, can you come
please. and convey the question better than I can.
Sure.
I don't know. Is that possible, Berkay, or can you? Are you being muted centrally? Maybe that's more difficult.
Maurice.
Okay. Yes.
All right. The attendees just can type you the questions as discussed.
Okay. Okay.
So it's written on the chat box, Selva Hanım. Maybe if you can check the chat box from the below of the screen, you will see the question in full in written.
Sure. Menekşe, can I get another question and then continue and come back to that question quickly, please?
As you wish. You are at this time, Maurice.
Yeah, I'm having.
Okay, I do have one other question, which I think is quite relevant for this topic.
Sure.
TCIP in the past, I think, was looking at using satellite data to manage claims after a large event, and I guess this comes back to the key service delivery that in our clients, the policyholders, are ultimately looking for a quick payout when they need it, immediately after an event has occurred, or as soon as possible, so that they can get their lives back together. And TCIP was, and this is some time ago, so I'm not quite sure whether it was something that was discovered to be not viable or something that was discovered to be insufficiently developed to be deployed. But is that something which you have considered since you stepped into Turkey and took responsibility for TCIP, the use of satellite data in order to generate particularly the reinsurance payouts quickly, so you can judge what the scale of a loss might be?
Actually, Maurice, we're working on that as well. We're not just with TCIP team, we're also working with the other government bodies. We have other projects as well. And we already started to that, actually. And it will be extremely helpful for us. And by April, it would be, our project will be done, and it would be very helpful for all the industry, actually.
Indeed, indeed.
Yeah. Sure.
Okay, Berkay, I can read out your question verbatim. Let's see whether or not, if I just read it verbatim, Selva. How can insurance sector encourage insurers to use real-time data for real-time risk assessment processes?
Honestly and truly, to be honest with you, this is not something I can just, give an extensive answer for this. And so all I can say is, honestly and truly, this is not something I can able to answer it in a very technical wise. So I would be a way to answer this question, because I'm a person, I like to talk about the things that I'm extremely have the information and to serve the information, actually. So I would restrain to answer this question, actually.
Okay, no problem. And then one other question has come in, referencing the New Zealand approach and the Japanese approach, and asking, do you think it is necessary to make changes in terms of regulations of how to pay earthquake losses? And specifically, I think then in the case of a Marmara earthquake, would it be better to make payments in parallel with the New Zealand approach? Not quite sure.
Actually, I don't agree totally. The New Zealand approach it took forever to be able to pay the losses. And as you can see from our past, all the claims has been paid, and I don't agree with that. We don't, consider the New Zealand approach, and we were pretty quick for the payment of the claims, actually. Yeah, and as you all know, for the New Zealand, it's almost like so many years, and the claims are still, hanging. And so many claims couldn't be handled in a really quicker way.
Indeed, indeed. And a question from Mark Bouquet. Hi, Mark. Saying thanks for the great session. Selva Hanım, would you please share with the audience your thoughts, plans about agricultural products involving AI within Tarsim?
Yeah, actually, for Tarsim, I wish Serpil Hanım was here. Tarsim's GM, actually, she could answer this better. At the moment, she's working really hard, and about she's been making the Tarsim pool a bigger pool, and the government has a huge intention for Tarsim and supporting it so much for Tarsim. Can you hear me?
I can. Sorry about that.
Sure. So this year, our aim is to be able to using the technology and a lot of support from the government, and the pool is going to get bigger, and the premium is going to be higher this year for sure, even for the COVID-19 and all these things. Yes. Mm-hmm.
Okay, that's fantastic. I think that's all the questions we have. So thank you so much, Selva. Really insightful, enlightening.
Thank you.
Very much appreciate. Thank you.
Thank you. Bye-bye.
Take care. Bye-bye. Okay, now I'm going to call in Andrew Woodward, if you're there. Andrew, if you can hear me.
Yep, I can hear you fine.
There you go. Okay. Hi, Andrew. How are you?
Can you see me and hear me?
We can see you and hear you. Absolutely.
That must be a terrible disappointment.
So you're in Dubai.
I am very much in Dubai.
Excellent. I have to say it's a bit of a novelty seeing people in ties. So looking at Utku Bey earlier as well, I was thinking, oh my God, I need to start remembering how to put a tie on. I'll just introduce Andrew briefly. Sorry, Andrew, you were going to, I think you were going to show some slides, but it's probably easier to communicate what you want without slides. Is that the case?
Yeah, I mean, just before you do the introduction, I just wanted to say I've been hugely impressed by the number and quality of the questions coming in. And I don't know about everybody on this call, but I'm PowerPointed to death over the last 6 months. So I'd just like to say a few quick words about what we're doing with Lloyd's, and then I'd like to try and answer as many questions as I can on behalf of Lloyd's.
Perfect. Okay. No, that sounds perfect. So I'll give, for those who don't know you, Andrew started his career in exactly the same year as me, 1983, sorry, beginning at General Accident in the UK, and then moving out to the Middle East in 1994. And in that region, he has worked for a range of multinational and local insurers in Saudi Arabia, Egypt, Oman, and the UAE. So very broad-based experience of the issues relevant to that region. He's now heading up the Lloyd's business and market development strategy for the MENA region. He holds a BA from King's College in London. He's a fellow of the UK Chartered Insurance Institute. And we look forward to hearing what you have to say. Andrew, over to you.
Well, good afternoon, everybody. And thank you very much, Maurice, for the introduction. It's an absolute pleasure to join you today. Turkey is a new market to me. The Middle East, as Maurice said, I've been around the Middle East for a long, long time. I've worked in Saudi Arabia, Egypt, Oman, and for the last 10 years in the UAE.
What's that?
And for me, the interesting thing, I mean, we've been talking about technology and digitization, innovation for as long as Maurice and I have been in this industry, which is a very long time. What I found fascinating, if you'd said prior to the onset of COVID, if you'd actually said to the people in this virtual room, and certainly to people in Dubai, if you had said that there was going to be a global pandemic which would result in 90% of people working from home, that despite that, people would carry on having their motor car claims paid, that people would carry on getting their medical claims. I don't have the data for Turkey, but I can tell you in the UAE, literally millions of medical claims have been paid, despite companies at very short notice having to move all of their staff to their homes. Now, in one sense, that's fantastic. In another sense, what a tragedy it is that it has taken a global pandemic to make our industry drag itself kicking and squealing into the 21st century. I celebrate the fact that as an industry, we've performed around the region, and everything I've heard about Turkey is exactly the same. And yet, and if you look at the global scale, Lloyd's will be paying somewhere between $5 billion and $6.5 billion. The global insurance industry is going to be paying over $200 billion as a result of this pandemic. Isn't that fantastic stuff? And yet, because of the way our contracts are written, so many people are looking at their insurance advisors. So many risk managers that I know have had to turn to their boards, and their boards have said to them, Mr. Risk Manager, we pay how many millions in insurance premiums every year, and what did we get back? And the risk manager has had to look them in the eyes and say, well, actually, sir, not very much. You know, and as an industry, again, Maurice, you know, I think you're on mute, but correct me if I'm wrong. In 1983, people used to complain about insurance companies, insurance policies being vague and ambiguous.
Mm-hmm. Absolutely.
When Lloyd's did our research after COVID, back came the response that what our customers want from us, not just Lloyd's, but the industry, is clarity about what is covered and what isn't. That's 30 years on.
Mm.
Now, I might be saying all the wrong things, but it does strike me that as an industry, we have so much to celebrate. We've done so many great things for our customers in this awful pandemic. And yet we still have so many challenges that are the same challenges we've been facing for decades. That's one thing I wanted to say. I think the second thing I wanted to say about innovation and digitization. Now, I'm new to Lloyd's. I've only been in Lloyd's 6 months. Everybody in Lloyd's tells me it takes at least 6 months before you understand what's going on. So let me talk a bit about my experience of digitization and innovation when you're in a retail insurance company. Now, my previous employer was the Abu Dhabi National Insurance Company. It's one of the largest in the UAE, does quite a lot of business with Turkey. But you know, it was about $1 billion turnover. So by regional standards, that's quite a big insurance company. Now, there wasn't one manager in that company who didn't think we should be digitizing and improving our approach to technology. There wasn't one manager who didn't think that that's what we should be doing. What caused the problem was not should we be digitizing, but in what order do we do it, and how do we allocate the limited resources we have to do it efficiently? And I'd be interested from feedback from colleagues in the market that the challenge is not should we do this, but how do we do it, in what order do we do it, and what are we trying to achieve when we do it? And perhaps in that context, I was going to show some slides, I won't, but there is something that if you go on the Lloyd's website, there is something called Future at Lloyd's. It's well worth having a look at, because the methodology that Lloyd's used was, even prior to COVID, Lloyd's realized that, okay, we're a 300-year-old institution, we're a fantastic institution, great brand, everybody loves Lloyd's. Everybody trusts Lloyd's, you know, but we haven't lasted for 300 years by just doing the same thing over and over again. And Lloyd's started a process back in 2018, I think it was, of saying, what is the future going to look like? And it started with an enormous consultation exercise. Literally hundreds of interviews with brokers, with clients, with cedants, with stakeholders from all across the market saying, what does this market need to look like? And trying to reduce that to some fairly simple answers. And, you know, it really came down to, everyone said to us, you need to simplify the process of getting to Lloyd's. You've got to make yourself easier to deal with. You've got to reduce the cost of doing business with Lloyd's. You're too expensive to deal with. You know, it really was that simple. And they said there was a lot about culture. There was a lot about culture. Lloyd's is a wonderful, centuries-old institution, but everyone was saying to us, it's not just about the cost or even the process of doing business with you. It's the way that you do it. And all of that future at Lloyd's, which I do urge you, and I will arrange for Menekşe to have the presentation and make sure the links are there so that everybody can look at the future of Lloyd's website. And there's also some very useful stuff about the way we responded to COVID, where there's some really innovative thinking going on, which again, I'm happy to talk about, but I'm conscious we've got about 45 minutes left and 2 speakers to go through to get to. I think, is that right, Maurice?
Yeah, but don't worry, no, you're fine.
So, you know, but with your agreement, I think if I can pause there, and then I would invite people to ask as many difficult questions as they would like to.
Absolutely.
There is one,
okay,
there's one in the, can I just say there's one in the Q&A from Mr. Usakli at 4:06. He said, in the last... You're looking at that one?
Sorry, am I seeing?
It's in the Q&A, not the chat.
Sorry. Okay. Yeah, I haven't seen these. I was looking at the chat box. So, okay. Go ahead, Andrew. Deal with that question if you could. That would be great, because I've been looking at the chat box rather than the Q&A.
Well, I was just looking at this, and I you know, as somebody who used to work in the retail market, I loved that one. In the last year's combined ratio of the market is increasing for corporate fire risks. Do you believe AI modeling or data-driven modeling will affect the soft pricing policy of the market? Are we going to see rate increases like the European market? To which I think the answer would be, I wish. Because I think if I see what's happening, if I can say what's happening in the UAE market, what we're seeing, where capacity is an issue, rates are going through the roof. Rates are absolutely going through the roof. You're seeing double-digit, even triple-digit increases on that kind of business. But if I look at the typical mid-market retail business, when I talk to cedant companies in the market, they tend to look a bit sad, because the corollary is that the smaller business, the SME type business, motor business, medical business, that rates are going the other way. I'm not sure that as long as you have a market share chasing mentality, as long as you have a market culture that prizes market share, you know, I'm not sure that whether you use AI, machine learning, or an abacus, I'm not sure whether that really changes the results in the long term.
Got you. Okay, now I'm glad you alerted me to the fact that we have these questions in the Q&A box. I think one that's come in that's obviously specific to you is that, and I will deal with those other questions definitely in a moment, but you mentioned the response to COVID, Lloyd's response to COVID, the industry's response to COVID. What feedback have you been getting from governments or regulators as to what they think of how you have viewed it, or how you have responded to COVID?
In the UAE, there was a huge amount of interest in the Lloyd's white paper. what we did was we did one of these webinars, which was, we had CEOs of the biggest local cedants, we had all of the major brokers, we had the regulators. We have two regulators, one onshore, one offshore. They were both there. And what made it, I think, really get traction was that we had the risk managers of the two big airlines, Emirates and Etihad. We had the risk manager from ADNOC, the state oil company, and two or three others. Now, there was a huge amount of interest in the Lloyd's papers. And at the end of it, we kind of said, all right, well, that as an academic exercise was very interesting. And particularly in the third of the three initiatives, which is something called Black Swan Re. Now, again, I won't go into too many details, but what the Lloyd's white paper essentially says is that you can't underwrite a pandemic. There just isn't enough capacity, even remotely. So if you take the global balance sheet of the insurance industry is approximately $2 trillion. Well, the cost of COVID so far is a multiple of that. So the only way you can deal with it, in future is a combination of the private sector, the global insurance industry, and government. And that was probably, of the three things that's set out in the Lloyd's white paper discussion document, Black Swan Re is the one that really is attracting a lot of attention, and particularly somewhere like the UAE, which always prides itself on being interested in innovation and being ahead of the game. So what we did was, at the end of the webinar, we had a further discussion where we said, well, what are we going to do with this? And the logical thing is that we're going to go and have a chat to the government. But it's very important that the feedback we had from regulators and from various people, this must not come across as some kind of insurance lobby group seeking a commercial advantage out of this. So we're positioning it as the UAE insurance industry, from customer all the way through to reinsurer, playing a more proactive role in helping the economy position itself for, God forbid, something similar in future.
Indeed. Okay. That's very helpful. Look, I think in relation to Lloyd specifically, because I'm guessing a lot of people will know that Lloyd's, with its global licenses, has the ability to be a really supportive facilitator of capital provision against risk. And you have within Lloyd's the most incredible data source, which could theoretically be used in really powerful ways. And yet it's a market. And the consolidation of that data and the use of that data in a consolidated way arguably undermines the competitive market nature within Lloyd's, which is a key characteristic which we as brokers and buyers, or reinsurance buyers, need. So I think everybody's rooting for this, the future at Lloyd's to succeed in relation to all of the key planks that John Neal and the group have identified. But the reduction of costs, including acquisition costs, which is a broker issue partly, but automation definitely is a key element. And despite being in a leading financial center in London, despite being around for so long and at the forefront of the reinsurance industry, it's surprising how slow Lloyd's has been to automate electronic placement and claims handling, although it's beginning to happen. But in your view, I guess the question that I'm trying to frame is Lloyd's an entity, or is Lloyd's a market containing many entities? Because its real power, I think, comes from its scale and its collective data. But how can that be deployed when you have individual entities trying to compete?
Well, as someone who's been in it for 6 months, I'm possibly the least qualified employee of Lloyd's.
Even as a neutral observer, as an outside observer.
Okay, let me comment as a 6-month employee and as someone who has done business with Lloyd's for the whole of my career. It's both. It is a highly competitive market, but it's also the most extraordinary brand I've come across in our industry. Just walking around with a business card with the Lloyd's brand on it opens doors in a way that I personally have not experienced ever in my career. And that is because I think of Lloyd's position, the values of the place, the traditions of the place. And these are cliched things, but they matter. And also the sheer intellectual power of the place. When you've got all of these entities within the market competing and climbing over each other, the most extraordinary intellectual power gets generated. Now, if I compare it to any sort of the multinationals that I worked for in the past, you don't get that kind of intellectual hive that you get within Lloyd's. You don't have that extraordinary deal-making entrepreneurial oomph that you have in the Lloyd's market. And I don't just mean obviously the underwriters. I mean the underwriters, the brokers, the providers of capital. It's the most extraordinary, it's the extraordinary thing. So indeed, I think the answer is, and when you were talking quite rightly about the reluctance to engage with technology, you know, that's been something everyone's been talking about for a lot longer than I've been in the market. You know, it's a fact. But I think the kick that has happened, you know, when I first started talking, the fact that not just the London market, but the whole industry has been kicked into a way of doing business that we simply, you know, what's happening now is stuff that people were kind of talking about as something that might happen in 5 or 10 years' time, and well, actually, probably, hopefully, wouldn't really. And now we're doing it.
Sure.
And
okay.
So am I drifting off topic?
No. You're not. No. You haven't. You did. You answered the question. No, thank you, Andrew. No, I think I'm just conscious of time. We started a little late, so we probably have a little scope to run over. But nevertheless, I think I would, because other people will need to leave when this event was scheduled to end. So I will jump on, if I may. Andrew, thank you so much. Really very, very insightful and very, very helpful. And we will move on to Tom. So if Tom could demonstrate that you're alive and well, and let's have a look at you, Tom, if you can, or hear you.
Here I am.
There you go. Hi, Tom. Now, Tom is in sort of formal Bermuda workwear. So in case any of you are thinking I'm relatively relaxed, Tom is sort of a step beyond what I can manage. And no, great to have you with us, Tom, because I know you have certain PC issues, so well done for joining. Tom, for those of you who and Tom, many of you will know because he has been working very closely with Menekşe in developing loss indices for the Turkish market. He heads up PCS, which is the Property Claims Services Unit within Verisk Solutions. Now, PCS, for those of you who don't know it, provides cat loss estimates, which the industry uses to set reserves and to deploy adjusters. And it's also used to enable ILS, non-traditional capital, to invest in catastrophe risk and, in fact, in other areas of risk. So from having a very US-focused background, PCS has now expanded under Tom to reach certainly Japan, Asia-Pac, Latin America, and Turkey. And from property, in terms of line of business, he's expanded it into cyber, marine, energy, terror, and larger risk losses. So unfortunately, he has a history at Guy Carpenter. We won't hold that against you, Tom, not for a second. And Deloitte. He's a very physically active guy, actually. You can look at the size of the muscles. So open water swimming or whatever else you described, I take my hat off to you. So, you know, Tom, as somebody who knows all of those regions and who really has a feel for the importance of data facilitating capital support against risk, I think we all look forward to hearing what you have to say on this subject.
Teşekkürler kardeş. And a special thank you as well to Faripe and Menekşe. I'm honored to be among some of my favorite and most impressive people in the Turkish insurance market. What I found interesting about digitization and the future of work over the past 7 months of the coronavirus impact on the insurance industry is that the industry hasn't had to mature in terms of innovation acceptance as much as we all thought. So the notion expressed earlier by Nikhil that nothing's going to change in the near term, it is very true. So with the social distancing requirements and constraints on seeing people in person, my team went out and did some market research in April. Our thinking was, ahead of hurricane season in the United States, what would happen if a major hurricane impacted a state with a very high rate of COVID-19 transmission? In addition to having near-term independent adjusting and claim handling implications, it would also provide a test case for the future digitization and other innovative tools that could come in through non-catastrophe or non-crisis situations in the future, right? So you think about things like straight-through processing and touchless claim handling. If necessity is the mother of invention, then an active catastrophe season during a pandemic would provide the framework for testing out what would become the future norm. Well, I am happy to tell you none of that was necessary. What we learned is that during an active hurricane season, it seems as though the hurricanes didn't get big enough and the COVID transmission reduced at just the right times throughout the summer, so that the industry was never tested on a lot of the innovation it was looking at and indeed tested. So what we learned in talking to 25 or so catastrophe claim professionals back in April is that they were ready and had piloted tools that they would be comfortable deploying during a catastrophe. So things like the use of drones for aerial imagery didn't actually get a whole lot of endorsement early on. What we learned is that the aerial imagery and the digitization of that imagery for use in claim handling, especially in the CAT situation, was seen as a limited or a point solution in a market where you still needed to get face-to-face with the conditions of the claim. Satellite imagery as well was seen as somewhat useful, but required clear skies and other conditions that you can't necessarily count on. We found that adjuster and claimant collaboration tools had a lot of potential. Xactware has the claim experience tool where your claimant downloads the solution to an app and the adjuster can talk them through different parts of kind of recording, visualizing, and assessing the reconstruction cost associated with the damage. Now, we did find that there was considerable interest in that solution by the insurance industry. Mind you, Xactware is part of Verisk as well. And we see a lot of potential for that. It wasn't put to the test the way we expected during hurricane season this year, largely because the social distancing requirements weren't as extreme relative to the size of the cats, which wasn't as high as we expected. We also saw a lot of interest and expectation around tools like FaceTime that would help, or even WhatsApp that would help claimants and claim handlers talk to each other. There's also a willingness to be a little more flexible on claim payment, which is something we've been hearing about for a while as well. There's a notion that you can reduce loss adjustment expense by becoming more flexible on the indemnity that you pay and either breaking even or possibly saving money relative to traditional claim handling. But habit, consistency, and a focus on being right rather than being cost efficient has been something of a barrier to adoption of that sort of thinking. There were a number of claims departments, though, that were ready to pay the claim on a more streamlined basis using analytical tools, aerial imagery, and model output, but tighten the reins on fraud detection on the back end to make sure that straight-through processing wasn't leading to truly unnecessary or fraudulent claim payment. These are all trends that we expect to see popping up more and more over the next couple of years and eventually becoming the industry norm. That being said, there are a few barriers that we have seen, especially down here in Bermuda, to remote and digital kind of claim adoption. And as Maurice mentioned, I'm having laptop issues right now. This is directly relevant to the conversation. So Bermuda is famous for having a difficult customs process and 65,000 people that love their Wi-Fi. So throughout the pandemic, it's been hard to get replacement equipment, and also bandwidth strain has been very real. So if you think about post-catastrophe Miami or New Orleans or Houston, the strain on bandwidth would become immense, and that could impact streaming video or visualization heavy claim adjusting technology. That sort of bandwidth strain could become a problem for the remote adjusting process. When you think about Houston or Miami, translate that to southeastern Turkey, Diyarbakir, Şırnak, Nusaybin. If you had limited internet or Wi-Fi access in that context to begin with, then a catastrophe situation, especially just the deployment of adjusters to that environment, would make the situation much more difficult. So we do need to think about either compressed transmission or strategic use of those tools, or balancing in analytical solutions, which may be right most of the time, with verification on a more limited basis using those remote adjusting tools. The good news, of course, is that the present will persist for a while, because we are by definition always in the present, and the future is always right around the corner. But I do see a certain amount of incremental innovation coming over time, with the bigger issue actually being incremental adoption. The state of innovation has been fantastic. What we now need to do is either stick our necks out as an industry and start to adopt what's present, or wait until we encounter more crisis situations that require us to. So with this, I'd like to open for questions, because I'd rather hear from other people than hear myself.
Excellent, thanks, Tom. Look, there are some of those questions which were sitting in the Q&A that I've discovered. I think you're a lot better positioned to answer than I would be, for sure. Jayan Aliyev has just asked, what do you think about using new tools for obtaining, analyzing data in terms of digitalization processes? For example, using Python instead of Excel. I wouldn't even know where to start with that, because I don't know what Python is. So over to you.
In full disclosure, neither do I. I'm not a data
Excellent.
I will tell you that just about anything is probably better than Excel when the amount of data goes up enough. I think that the biggest issue with the use of data science and advanced analytics for digitization and the claim process really comes down to finding your spot. Right? There's a belief that AI and machine learning will replace everything. And pretty soon it'll be the robots doing all the work for us. There'll be limited cases of extreme expertise where a person has to get involved. But if you can manage 20 to 30% of claims through first notice of loss on an analytic basis, and you can manage 60 to 70% of fraud on an analytic basis, with the rest being on the fraud side, organized fraud and kind of people-intensive fraud, right? And then the rest of the claims being significant expertise issue, wind versus water, liquefaction, blah, blah, blah. I think that starts to frame the potential for data and analytics in the claim handling process. What I would say is the most important part is going to be to determine what can be done strictly on an analytic basis, mostly smaller claims, faster processing, profiling the claimant to know who your best claimant is so that you don't need to worry about fraud. Then you've got areas where you can streamline the claim process enough so that you don't need to send an adjuster out, but you still probably have to do some work beyond the analytic, right? Either collecting images or getting witness statements or having the claimant send in photos of difficult parts of the structure. Okay, Then you've got the stuff where engineering or specific expertise is involved, not just in the onshore energy space or large risk loss space, but also you've got in the US, wind versus water. You may have straight lined wind issues in continental Europe, and then in Turkey, I think the best example would probably be hail, because as we saw in 2017, it can happen. And as we saw before 2017, not so often that you can develop a lot of expertise in it. And then finally, you've got kind of true human intensive claim handling, where a loss notice comes in and you just look at this and say, no analytic would ever get it right.
And can I just ask a question which draws an element of your knowledge in relation to cyber risk and your collation of lost data? In the context of the vast increase in remote working, and there were stats in Nikhil's slide earlier about 300 million people working from home for extended periods. We did a cyber survey, Willis Re, coincidentally this week, and we had 1,000 responses from 56 countries: risk managers, reinsurance buyers, underwriters, claim staff, actuaries, brokers. And 86% of them think that cyber attacks will be more frequent as a result of the more remote working environment, more transactions occurring online rather than in physical environments. And 54% think it's going to be more severe. The losses will be more severe. And interestingly enough, there was 1 in 3 feel that there could be a cyber event loss of $10 billion or more. They feel that's likely within the next 5 years. What would your thoughts on that be? Because as we all talk about how we digitalize and automate our processes, we're necessarily making our businesses vulnerable to cyber attack. And business interruption is, the key concern as a result of that. Reputational damage, of course, as well, and ransomware. But predominantly, so what are your thoughts?
Okay, there's a lot to unpack here, and sorry for all the background movement and whatnot.
Not at all. No. I feel seasick, but I'm fine.
Yeah, my phone was running out of battery life, so I had to get to the plug.
No problem.
So a lot to unpack here. First off, the 10 billion. If you're talking insured, no way. We've actually just announced this week a database of the 245 affirmative cyber insurance towers of at least 200 million US dollars worldwide. We also have 120 of the 500 or so companies that are X 100 million. We know the large risk landscape. Together, you think anything 100 million or up in terms of tower is 750 companies in total. We believe that accounts for roughly 50% of the global cyber market by premium. So we know the large risk landscape. We know that the SME business is smaller than everyone believes. I have an article coming out at the World Economic Forum in the next couple of days that goes into detail on this as well. So the notion that you can get to 10 billion insured through a single cat, I'm deeply suspicious of that. 10 billion economic is more realistic. So the US, the White House put out a number on NotPetya in 2017 at 10 billion economic. Our insured loss is around 3.4 or 5 billion right now, which includes a $400 million chunk of D&O. We then added to that economic losses that were not insured that we're aware of. And we were able to get the number up to probably 5 or 6 billion on that basis. Like FedEx TNT had $1 billion economic loss, totally uninsured. AP Moller Maersk was 300. Getting to 10 is hard. Because I mean, a lot of calculations that you use to figure out economic loss sometimes are straight line. Now, in terms of the heightened risk environment right now, clearly something's going on, right? We're seeing massive ransomware attacks. A lot of it's driven by economics, though, because 18 months ago, ransomware demands were 5 figures, $50,000, $60,000 at most, and people were paying them because it was a nuisance pay, right? Now we're hearing about ransom demands that are 35 to 50 million US dollars. Garmin, we know, paid 10 million US dollars in ransom alone against $100 million attack. So we think that while the COVID-19 environment has certainly inspired hackers, if you will, right? Because they love chaos. So not so much work from home infrastructure, but general economic or general socioeconomic confusion, chaos, carnage. They love that stuff. That heightens the threat environment. There has been some talk about work from home architecture being vulnerable, but we haven't seen a whole lot of actual evidence of that in claim flow yet, and we have been asking about it.
Okay.
When you look at the economics of ransomware, though, that's been the big driver. So we think that the U.S. Treasury Department's decision to restrict ransomware payment may introduce a new market dynamic that makes ransomware less attractive, but it remains to be seen.
Okay. Tom, look, thanks a million. That's all really helpful and very insightful stuff. As with all the speakers, I think I'm learning a hell of a lot. Appreciated. I'm going to jump on now because we have some very, very good material I know coming up from Munich Re. And I want to just check firstly that Tobias is online. Tom, thank you again. Take care. We'll see you soon, hopefully. Stay on the line, though. Stay on the line. Tobias, if
Hello.
Can you hear me? Ah, fantastic.
I
Okay.
can hear you.
Do you know what, Tobias? I had a feeling the sartorial elegance would improve from Bermuda when we went to Munich. So, and you haven't let me down. Well done.
Thank you. I take this as a compliment, Maurice.
You should. You should. So again, if I can introduce you firstly, Tobias, you're very welcome. Thank you for patiently waiting. Tobias Sonndorfer he's a client management exec in Munich Re. Been at Munich Re for 10 years. And before that, again, a very diverse, different type of background to many of us in the industry who are lifers in the industry. Before that, he was in M&A advisory, valuation and strategy in PwC for 5 years. Before that, with DZ Bank handling equities, again, M&A. So very much a different type of background, which will have given you access to observing how those financial sectors have been transforming and meeting the challenges of digitalization, automation. I know you have prepared some excellent slides, which I looked at yesterday, so I'm not going to interfere with your time. I will hand over to you. If you want to start sharing a screen, Tobias, we can share that information with everybody. Excellent. Okay, that's coming up now.
Can you see something?
Can see that? That's perfect. Thank you.
Oh, fantastic.
I don't know if you want to go to slideshow then, or you are on slideshow. That's fine. That's fine.
Is it okay? You
That's
tell me
cool.
whether it isn't working. Great. Thanks a lot for your kind words, Maurice. Thank you for your introduction and welcome to all of you and to wait for this very small little tiny presentation. It's really great to be with you and to be amongst the most high profile speakers and presenters in this second section, which I participated. Well, I can say that probably being or speaking about digitalization and the future of work couldn't be a broader topic. And as you rightly said, I had the pleasure to look also into other financial services industries and in particular banking. There is this term of that the world is overbanked, which says nothing else that banking is required or banking services is required. But the question whether a bank is the right institution to do that is a question mark. So with this, I trying to nail it down a little bit on my thoughts around digitalization and the future of work. And please take it as an impulse. I really keep it short and simple, and I'm happy to receive your questions afterwards. So I would want to start with that slide. I hope you can see that.
That's fine. Tobias, I was just going to suggest very briefly, if you go to slideshow, then we can get the full screen.
Okay.
So that looks better. Yeah.
Yeah.
Okay. Although I can't. Yeah.
Can you see the slide?
Just waiting for the actuals. Can't actually see the slide.
Okay.
I see Munich Re up in the corner.
Then it's in my, I don't know. Then you can just.
So just, Look, it's still visible. I just think it's just to make it slightly larger for some
I'm
of the
sorry,
subsequent
I'm
slides.
sorry.
But
I don't
no
know
problem, no problem.
why it isn't working. I think it's
That's fine.
I'm trying to make it even bigger. Give me a second. No, it isn't working for whatever reason. I'm sorry about
or
that.
Even down at the. That's okay. No worries. Carry on, please.
Well, what you can see here, and I would want to start in with that term saying that 90% of CEOs believe the digital economy will impact their industry, but less than 50% are executing on a digital strategy, which is something I find very, very inspiring. Because the question is certainly, why is this the case? And I'm sure that there is a lot of explanations on why that is the case. And one we tend to believe is that digitalization is such a broad term that you have to orient yourself a little bit. And in essence, what we think it is all about, it is technology. And that is just echoing what the other speakers already said. I mean, it's all centered around technology and the question to which extent technology can be deployed. So what Munich Re provides on a regular basis, on a regular updated basis, is what we call the tech trend radar. And what that is that what you see here is our tech trend radar, and it should give an orientation around what are the tech trends we do see, independent of being applicable for insurance. As you see, it's divided in 4 sections called user centricity, called connected world, artificial intelligence, and in so-called enabling technologies. And this is just deemed to provide with our clients, to provide to insurance companies, to get a kind of a sense of what is out there on technological development. Because as I said, digitalization per se is simply too broad to just tap into. That should give an orientation. And we think technology and the ability of computing power is really the changing thing currently. And now certainly the question comes up, which of those trends are applicable for insurance? So which of those you can imply into your business, or probably on those you can develop a business model onto. And that's what I would want to show you on the next slide, and they're trying to design this as a funnel. But what this is exactly the way we approach it. So we look at that and we see trends coming, and we ask ourselves which of those trends can make a difference. Can make a difference for Munich Re, but also can make a difference for the industry per se, and to deploy that with our clients, with the insurance companies. And what you can see here is just a selection of those trends and of topics where we do currently focus on. And certainly we try to develop then a use case out of those trends, ideally together with our clients, to get a powerful proposition into the markets. And what you can see here is a very diverse set, I would say. It's certainly data tech and analytics. It's something like remote sensing on there. It's something like IoT, the Internet of Things, which is currently one thing which is driving us. It is AI as a term on there, but there is also something what's called ESG, which is the sustainability criteria in the insurance world. And even NatCat is there, not because NatCat is a digital trend, but certainly digital trends can be applied to evaluate natural catastrophes, probably different or in a different way than we are used to. And I think what Tom said to that, when it comes to the claims handling of a natural catastrophe, gives you a good feeling of what is behind that. Here on the sticker, just to mention a few of things which are initiatives we pursued or we developed then out of these digital trends. And just to name one of this, Realytics, which is the last one here, is, for example, an automated underwriting platform. The question of automated underwriting / augmented underwriting, data enhanced underwriting is something that drives us. And Realytics is a platform which should enable that. And put even the distributor, the sales arm, already in a position to do quoting for a selected kind of risks. So I hope with this short intro, I can give you a feeling of that for us, digitalization is closely connected to tech, which is the first takeaway I want to give you. And the second is we do believe that it's applicable for the entire value chain. And that's a slide I want to share just to illustrate that. So we think technology can or has the potential to transform the insurance value chain as we know it today dramatically. And now you can ask yourself, well, you are a reinsurer. Why do you look at the insurance value chain? And we have a fundamental belief. If these technological trends are so deep and so fundamental that it's impacting our clients so fundamental, we have to have a contribution as a reinsurer. You know that, and for those dealing with Munich Re, hopefully you feel that we always trying to have a partnership approach with our clients, that we say, well, in essence, we want to contribute a value add to you. That means your problems are our problems as well. So even having kind of a B2B business model, we have to think in a B2B2C business model, because the problems an insurer has with its clients or with the market realities is reflected immediately on us as well as a reinsurer. And that's why we think that way, and that's why we put a lot of intelligence also in understanding those dynamics. And I want to guide you briefly through that slide, and we just to illustrate what I mean with it's applicable for the entire value chain. So what you see from the left to the right on product and design, very briefly today, and it's a general statement, but today we have more type of one-size-fits-all policies with relatively high deductibles, and technology and data can transform this into, let's say, a per use type of product, a customized product, which is probably connected to a device, with which then allows certainly way lower deductibles. So we tend to believe that product design will change in future. The second is certainly an overspill when it comes to pricing and underwriting, where reinsurance, risk selection, and actuarial analytics is the center of today. And I think that is true for all of us. We do act on a limited data set, and we do act predominantly on historical data. And going forward, and as I said, using the computing power available, we tend to believe that machine learning and predictive analytics is what it's about to be. That you have a more direct and a more forward-looking pricing approach based on a completely different set of data. So one of the initiatives I showed on the slide before is augmented underwriting, as I called it, realytics, and we're trying to enhance traditional underwriting criteria with data available in the internet. Because to identify trends and to identify risk groups, which can then certainly be priced differently. The same holds true on distribution when we think about sales, which is a center and a key function, certainly. Today, very much agent-driven in continental Europe. I'm speaking here on a continental European base, and it's not different for Turkey. Very much call-centered related, and let's say there is an online portal, but we call it's a basic online functionality. In future, we tend to believe to say we think it's going to be more mobile. It's going to be more connected, probably also in relation to social groups. It's going to be more comparison type buying behavior, not necessarily through an aggregator, but through a very bespoke way and very quick way to compare. We do not believe that the human being as transacting insurance products will disappear. This is not my statement. We simply think that technology can enable human beings, brokers, agents, to do their job even more efficient in future than they do it today. One trend in that segment on the distribution part I would want to highlight is embedded insurance, so that you sell insurance on a place where you wouldn't really expect insurance to be. We can dig into that deeper later, but that's a trend we believe will accelerate over the next years. And last but not least, and I think we touched on that, or Tom touched on that deeply, is certainly administration and claims management, where all the points Tom laid out are right. And here as well, today, more manual, more on-premise, and it's time-consuming. And in future, we tend to believe more automatic, more instantaneous, cloud-based and technology-enabled. The example of the drones, for example, is something I really liked. So that's a little bit, a few thoughts on technology. And in the light of time, I really only briefly on the future of work, because I mean, certainly, not least because of COVID, it's a pressing topic, and it's probably the most important operational topic in each and every organization. So what Munich Re did right after lockdown was eased in Germany, which was mid of June, we did a kind of an employee survey, and I would want to share very transparently the outcome on that, because based on that outcome, we do currently develop the future of work for Munich Re going forward. And what is that? Well, certainly there is upside with what we learned through lockdown and through remote working. So we see a high productivity, an increased amount of productivity. We see an increased efficiency and an increased focus on meetings, because you simply jump to the point. Meetings are very direct. It's all well scheduled, so it's not those loose time we have in between meetings. You have a good availability in general of all employees, and for a lot of people, it's a better work-life balance because of the flexibility connected of working from home. But as it always is in life, there's always a flip side of the coin, and that is that it is more and more difficult to differentiate between what is home and what is work. So do I live on my desk or in my office, or do I work in my home? And those lines are blurred more and more, and the longer it takes, the more pronounced it becomes. There is simply tasks which can't be done as efficient or effective as it can be done in an office environment. And I listed some of those, but the most pronounced one is probably the last one, the creative work. The work where you need the bounce and the challenge with your teammates, where simply the answer is not a given. You have to have the social interaction with others. And this type of innovative development work is something where you need an office environment, where you need a place to meet human beings. Very difficult to do it on your own or just on a visual screen. Another one is that certainly office environment needs to be appropriate, and the infrastructure to work remotely needs to be good. That is true for keyboards, that is true for screens, that is certainly true for the question of how stable is an internet connection, which is a topic in Germany. So these are elements. And the last one is the question around video and video communication. We said that there is, or we observed that there is a reluctance of people to share video and to be visible on a screen, and it's not so straightforward that really each and every employee turns on the video to be visible on a screen. So that's our learning in the future of work. What we draw conclusions out of this is the following, and I would want to share a picture which really I like a lot, because it is a little bit touch of future on that. So we say, as of today, for Munich Re, there won't be a way back in the pre-crisis rhythm of working. So what we are convinced about is the advantages collected during the experience of remote working we would want to keep in future, but we certainly would want to deal carefully with the drawbacks of remote working. And one important element of that is office is required going forward, but office in future will probably look different than it did in the past. And that picture should just give you a little bit of a glimpse of how a future office can look like. You see that certainly also in relation to the pandemic, that you have, I don't know, touchless entry points, that you have low touch voice enabled technology when it comes to how your coffee is being served. At the same time, you have certainly remote collaboration tools which allow you having a big screen, which allow you having a good communication. Smart buildings in terms of how do I distribute work areas? Do I have traditional desks connected with some kind of meeting areas, which you can see here represented in the couch area? And so we believe that offices is important, or of increasing importance going forward, but offices need to look differently than they do as of now. And my final one is here, kind of a summary on the work, on the future of work. Is we tend to believe that if this remote working rhythm, and if remote working is entirely ours, so to say, is fully adapted, a better talent recruitment is probably possible, because location is no longer really the decisive factor. It's a global market in which you can tap into. The second is that existing global teams can collaborate more effectively. And last, than I mentioned, that is that the employee satisfaction will probably increase even further because of the given flexibility, and with that the self-responsibility around what you're doing. And this is it. And I would want to thank you very much for your attention, and looking forward to receive the questions.
That's fantastic, Tobias. Thank you. Very, very comprehensive, and touched on all of the key themes. So much appreciated. There are a number of questions which I'm going to go back to that were there previously, but there's one that's come up from Sabit Rahimov. What sort of data privacy issues or concerns could emerge from technology transformation of the insurance value chain? So I guess when you were talking earlier about the more forward-looking pricing data using predictive analytics, more targeted machine-driven marketing and product deployment, how does that sit with GDPR and such like?
Yeah, you mentioned it. GDPR is the magic word, so to say. So in Europe, there is a data regulation in place. I would say the limiting factor is here personal data. So what we saw, and what we also see and experience, is that whenever data has been delivered on a granular basis, it is on a granular basis, but it's not connected to a person, we can work with this data. Certainly, we have to have the approval that we can use this data, but it's not possible to tie it back to one single individual. And for what is the key of what we would want to get out of this data is patterns, trends. We will want to detect which type of behavior leads to which type of claim. And to do so, the individual as a person is not really necessary. It's just the behavior of the individual which is important to us. So yes, it is a sensible topic, in particular across Europe, but we believe that we have to overcome that in future, and to handle that carefully to explore the potential in that.
Indeed. Okay. No, that's excellent answer. Thank you. There are a couple of questions that have come in which are linked to a similar theme, and it's something which has characterized the big tech companies, something they've been criticized for, in that as soon as they see a startup competing entity that could threaten their business model in some way or their market share, they swallow it up and they buy it. So there are two questions which talk about that happening within the insurance sector. Are they related to how that is happening to some extent in the insurance sector? One from Ilker Kutsal saying, look, we know and follow that reinsurance companies have established accelerator programs and investment companies for startups in recent years. What do you recommend to Turkish startups to increase your interest in the Turkish ecosystem? And which areas do you have more interest in that startup ecosystem?
Well, first of all, yes, it's true. I think all big reinsurers established something like this, and even the big brokers did so, I think, to get this connection to the startup world. And we could speak endlessly about the reasons and why we do so. To that question, if I look at Munich Re, we do not follow through an acquisition approach. We have a partnership approach, and our partnership approach is oriented on the question, what's the business model we do support here? So and that's also the answer to the second question of what makes us interested in an ecosystem. The interest in an ecosystem is if there is someone from the startup world, an insurtech or a tech insurer, or however you want to call it, who contributes something to the market which is not yet there. So we are very proposition oriented, trying to understand what is my guiding question in that really is, what's the problem you want to solve? And if you have a proper answer to that, then I think we are absolutely up to speed to engage into a discussion, and not necessarily in our case in an acquisition or in an investment discussion. We believe we are a reinsurer and we're not an investor. There is venture capital funds specialized in investing in young startups, in providing seed capital. This is not our approach, but we have certain unique strength connected to Munich Re, which is connected in underwriting, which is connected in risk understanding, which is connected in a general understanding of an insurance market. And if we can team up in that you have a founder and an insurtech with a great idea, with something that can improve market conditions, and we can support that venture in being successful, then we have a match, and then we engage into that.
Perfect, thank you. Ebru, I hope that there was a question also about partnership with insurtechs at Munich Re. So Ebru, I think that question has been answered there. There's another one from Jehun Aliyev. Will the transformation from actuarial Excel analysis to machine learning tools reduce the demand for human force, or in contrast, will it create more jobs such as machine learning, deep learning developers and educators?
Exactly. I believe, and that's my personal opinion, I believe the later. I think new jobs are being created, and I think the hard time is the years ahead of us, because it's the transformation time. Also because lots of educational institutions are not yet there to produce, in brackets, to produce the staff and the resources we need to program those AI and to manage this big amount of data. So in general, the way of work and the way to apply data in future will change dramatically, but I tend to believe that the overall impact is a positive one also to the job market.
Indeed. No. Okay, fascinating. I think one other question which came into my mind, there is one other question which I'm holding for all the panelists who are still with us at the end, and that's Ferhan Oze's question, which is a general reinsurance market mood question. But just before that, in looking at the future at work in a human context, you touched on the fact that flexible locations mean that we have more a broader candidate slate, because people will be more capable of contributing, joining the workforce, when perhaps they have home care duties, or perhaps the transport options are limited. And that's certainly true. I just want to ask your view on the specific question of how that might affect gender diversity in senior leadership, because typically it is women whose careers tend to slow down in progression during the childbearing, child-rearing years, because the way society and cultures tend to expect behavior, they take on the bulk of those responsibilities, and find it difficult to combine that with a career and progressing their career in the way that men do at that same period. So do you feel that this may contribute to leveling the playing field a little bit, because it permits more flexible working? Work is not a time or a place, it's a series of tasks. And as long as they're done, it doesn't matter. If you do them better, you progress. What's the view within Munich Re on that?
It's a very interesting question first, Maurice. I think you are right. I think your conclusion is a right conclusion. At least theoretically. I think theoretically that is true. It's leveling out, let's say, the society, the limit, or the mindset of a society, so to say, and that can be beneficial for women taking up senior executive positions more often than it is the case today, not only in the insurance industry, but as well in the insurance industry. A big question mark to that is, for me, to which extent, let's say, the informal strengths within an organization are being affected by this change. And I think that is really too early to say, because it's half a year now which we live in this reality. But as you know, in every organization there is the formal, let's say, the formal structure of an organization. and there is the informal strengths amongst employees, amongst managers, which is something you shouldn't underestimate, I would say, which can play against that. But I would agree in your conclusion saying that this flexible working is leveling out the drawback not coming to the office on a regular basis.
Thank you. Okay, final question, and this is Ferhan Jose. I know you sent it ages ago, Ferhan, but a few years ago, Warren Buffett described the reinsurance industry as a gloomy one. Is this the case? Is it so? And do we have any comments on that? So you're in the chair, Tobias. You may as well answer, but if other panelists want to follow Tobias in giving a view on that, they'd be very welcome. So over to you first, Tobias.
No, it's not. Certainly it's not. How can I say something different? No, it's not gloomy. And I come back to what I said at the very beginning of my presentation, which is my experience from banking. And I still have a lot of friends working in the bank environment. I believe, and I fundamentally believe, that the needs for reinsurance, the needs for risk taking to enable industries to grow, to enable products to become better, to enable societies to grow, this need is a fundamental need, and that's our purpose. That's what we do. That's why we introduce new products like cyber and whatnot, to enable industries and societies to grow. And this is a fundamental need, and this need is there. What we see currently in the reinsurance industry is a transformation of around the question on how those needs are being tackled, and whether the reinsurance interaction in future is the same reinsurance interaction we had in the past. But when I look at it from a market needs point of view, it's the opposite of gloomy.
Absolutely. No, I'm with you on that. Tom, did I detect, Tom, you were trying to... Tom, yeah, please go ahead.
I'd say it can be both. I mean, I've spent my summer dealing with hurricanes, hailstorms, and political violence, and that's just in the United States. Then we can add to that our estimate for the Beirut port explosion. I mean, every time something goes boom in the night, it's a problem for the people affected, and it's an obligation for our industry. You know, we are here to make sure that after tragedy occurs, whether natural or man-made, the folks affected can get to some sort of platform where they can rebuild again, be they individuals or businesses who employ individuals. So it can be gloomy, and I think to a certain extent it is. But at the same time, our role is to make it less gloomy, often thanklessly.
No, absolutely. And Tom, I'm glad to see you didn't succumb to the pressure of changing your clothes while you were off screen. Sorry, is that Andrew? Did I hear Andrew in the background there?
Yeah. Look, I mean, reinsurers are like farmers and the weather. They always complain. It's in the DNA. But Tobias and Tom are absolutely right. I mean, this is a centuries-old business that does untold good. And you know, Lloyd's, we're very proud to be part of that. You know, but I think Tobias is absolutely right that the nature of the relationship between reinsurers, cedants, clients is changing, and it will. If we come back and have this conference in 2 years' time, I think it'll be looking completely different again in ways that we just can't predict. And one of the wonderful things about institutions that survive is that they adapt, they evolve, and they innovate. And that was the theme of that's been the theme of today. And I think it's that ability to be agile is just going to be ever more important in future.
Totally. Excellent. Okay, look, that's a wonderful way to wrap up. So I'm gonna thank, I know Nikhil may have had to leave, but Nikhil, Andrew, Selva, Tom, Tobias for a tremendous contribution to this discussion. Thank you all who have submitted questions. I think I've managed to address all or include all of them. And I think our speakers have given tremendous answers to it. So hopefully everybody has taken something away from this reasonably useful I found it fascinating. Thanks very much for the privilege of being allowed to do the moderating at this. And with that, I will hand back to Menekşe, the Queen. Menekşe.
Hello, and thank you very much, all of you, for your time. And Maurice, you know, we were chasing you for moderation for years, and you were always in Bermuda. This time we catch you wherever you are, and could do it. And all of you and the other two speakers, Selva and Nikhil, Tobias, Andrew, Tom, and Maurice, we are really grateful for your efforts. And thank you very much for your kind feedbacks. And before giving the final word to Fahri Bey, who will say thank you to all the participants, please note that this third edition, the third session, will be next week, and it will be a related subject: data engineering, a new era in underwriting, smart and agile, headed and moderated by the General Manager of Aksigorta, Mr. Uğur Gülen, Metin Demirel, the Deputy General Manager of Aksigorta, and Asif John, the CEO and founder of Argenesis, will make another conference, another session of this same conference in English. So we'll be happy if you have time to join us. Thank you very much. Hope to see you next year. Most of you face to face. If you cannot come online, we will do both of it. So we will develop ourselves. Fahri Bey, the ground is yours. Thank you very much.
Menekşe Hanım, thank you very much. First of all, now it is end of the symposium now, and it was really very valuable day. And I would like to thank to all participants and speakers for their contribution. Hope to see you in our next events, and I wish to everybody healthy days, and thank you very much for your participation and contribution. Thank you. Maurice, thank you very much. It was a very great job.
Pleasure.
You did a very good job. Thank you.
Oh, no, it's our pleasure, absolute privilege. Thank you. Take care. Thank you, everybody. Bye-bye.
Thank you. Goodbye.
Thank you. Thank you, Tobias. Bye-bye.
Bye.
Teşekkürler.